So Warren Buffett said in his final annual meeting as Berkshire CEO that he thinks the US dollar is going to hell.
Oof. Well, our guest is an economist who's been studying the dollar for a long time, and he also thinks that the greenback's dominance is really beginning to wane.
We're going to get into what that means for our wallets and our investments later on in the show.
Hey, everyone. This is WSJ's Take on the Week, and I'm Telis Demos.
And I'm Gunjan Banerji.
This week's episode is all about the greenback, the almighty dollar, that thing burning a hole in your pocket. Cash rules all around us, including this very podcast. The U.S. dollar is a hot topic for markets, and we are going to get deep into a conversation with one of the foremost sort of thinkers about the future of the dollar a little bit later in the show. But for now, and not unrelatedly, let's talk about what the Federal Reserve did this past week.
What did you think of the recent meeting, Telis?
Well, the recent meeting, there was a kind of no news was the news, right? The Federal Reserve held its target interest rates steady at between 4.5% and 4.25%. And then Chair Powell said, somebody counted it. I lost track, but it was like, a dozen plus times said something along the lines of, we need to wait. We need to wait for what tariff policy will be.
Yeah, my big takeaway was that they're going to be patient and that there's just so much uncertainty about the economy right now, right? Like so far, all of the hard data that we've seen, the jobs data, even the GDP to some extent, has shown the economy is still chugging along. And like everyone else out there, the Fed simply doesn't know if that's going to change because of these tariffs. And I think that's why you have investors across Wall Street, analysts, economists taking a look at the shipping data right now. What's happening at the ports, the harbors around the US, what is going on inside shipping containers, what's going on in the trucking data. I think that's where everyone's looking right now to see how these tariffs are rippling throughout the economy.
That's not exactly the usual data, right? You didn't go to
not.
business school to learn about traffic into the LA ports or something like that. What is a number that people are looking at? I think you wrote about some specific indicators. Give us an example of that.
So things are going crazy when Wall Street is reading the shipping news. This happened during the 2008, 2009 global financial crisis. People were tracking things like
the Baltic Dry Index, right? Okay,
the Baltic Dry Index.
It's back.
Yes, it's back, which
Wow.
measures shipping costs. It plunged to a record low in 2008. So already we are seeing empty container ships. Companies pull back on booking containers to ship things across the Pacific Ocean. At the Port of Los Angeles, imports are expected to fall 35% over the past week. It feels like a moment where instead of looking at these monthly reports on the economy, take the jobs, inflation data, people are looking at other indicators, right? Like what are CEOs saying? What's Walmart's CEO going to say in this coming week?
Yeah, Walmart. Talk about things on boats. Walmart reports its earnings this coming week. They're going to have their earnings call on Thursday, and I think that's going to be a big event for the market because, Walmart's really right smack in the middle of tariffs. But at the same time, it's a company that's also considered very resilient, right, and able to handle not just, kind of where goods are coming from and where they're getting them, but also to weather whatever's going to happen to the consumer, right? Walmart sells, as we've talked about many times on this show, they sell both like the day-to-day stuff that you absolutely need, the groceries that you need to live, but they will also sell you a really nice handbag these days. So whatever the consumer's doing, Walmart seems to be poised to pick up that business. But the shipping thing is really interesting because what we were, what I read in the journal recently was that, Walmart says that stuff already on the ships is not really going to be subject to tariffs, right? Things that are on their way from China to the U.S. or that have arrived. Those are basically like, okay, we have that stuff. But, if nothing new is coming, that means that the next round of goods will be subject to tariffs and potentially higher prices. And so while Walmart and other big retailers have talked about, okay, we can kind of hold the line on prices for now, we can't do that for a while.
Right. And what's going on, in those ships, what's going on inside those container ships can actually ripple through local municipalities, the entire nation, earnings for companies like Walmart, right? Like if you have fewer ships docking at the Port of Los Angeles, that might mean fewer dock workers down the line. It might mean that there's less demand for the truck drivers that bring those goods to the rest of the country, to retailers like Walmart.
And, like you said, though, the Fed is aware of all these things, but the hard data where they're looking, the unemployment rate, it hasn't shown up there yet, and it's hard to say when it will. I mean, that's really the whole debate that we're having about the economy. But one thing that definitely is happening is that Warren Buffett is going to retire as chief executive of Berkshire Hathaway. He will end his long run at the top of that company, and really his long run as kind of the voice of investors and Wall Street. Woodstock for capitalists, the Berkshire annual meeting recently was where he announced this, and he also, though, had a few parting messages for investors at what will probably be his final kind of presiding over the meeting, as a new chief executive will be taking over soon. Gunjan, what jumped out at you from his comments?
Throughout the year, people have been worried about this American exceptionalism trade. Will the U.S. still be the place to be, right? And is it going to continue to be a place where people want to put their assets? And what struck me was Warren Buffett's optimism about the U.S. He's always been really optimistic about the U.S., but it was especially interesting to hear right now at a time when that trade has been in question. He said, if I were being born today, I would negotiate in the womb to be born in the United States of America. He wasn't so optimistic, though, about the dollar and fiscal deficits. What did you think of that?
Well, but before we talk about it, I want to tee it up. I want to play that clip of what
Yes.
Warren had to say about the dollar.
Obviously, we wouldn't want to be owning anything that we thought was in a currency that was really going to hell. And that's the big thing we worry about with the United States currency.
Wow. Okay. So
Not
going
mincing words.
going to hell. That is his worry about the U.S. dollar, and just unpacking what he said right there. It seemed like his principal worry was fiscal, was the United States, debasing its currency, and I think if you unpack that, I think what that means is sort of spending beyond our means, borrowing a lot, and then having to essentially kind of print money to pay back our debts, and that means that anybody who owns investments that are denominated in dollars, i.e., all of us in our stock portfolios, are potentially at risk of owning things that will become relatively less valuable vis-a-vis, the things that you could own in other countries, right? And we've talked a few times about, should you be investing more in European stocks and things like that. But somebody who's been talking about the dollar for many years and the U.S. fiscal situation is our guest today. It's Harvard economist and former IMF chief economist Ken Rogoff. And we talked to Ken about, a bunch of things going on with the dollar. Gunjan, was there something from this conversation that really jumped out at you?
I mean, he has been looking into this for years and years before it became a hot topic for journalists, for everyday Americans. This year, the dollar has really entered the spotlight, and he's been researching and exploring this for years.
So let's get to that conversation after the break. Welcome back. Today's guest is Ken Rogoff. He is an economics professor at Harvard, former chief economist of the IMF, and the author of a new book, Our Dollar, Your Problem, An Insider's View of 7 Turbulent Decades of Global Finance and the Road Ahead. Ken, glad to have you on the show to talk about all things dollar.
Pleasure to be here.
Your book really could not be more well-timed. I know you didn't plan it. I know these things take years.
I didn't plan it. I sometimes when you're an academic, you want to write something that everybody disagrees with, and 5 years later, it turns out to be true. That's actually the goal. But this one, I think everybody started talking about before it came out.
So you said you've been working on this for 6 or 7 years.
Yeah.
And it happens to come out around this crazy turbulent period for the dollar. I was looking at some data, and this is the worst start to year for the U.S. dollar since the 1990s, which is pretty remarkable.
Well, but let's also, but before we get too far into it, I just want to contextualize it for our audience a little bit. So, the U.S. dollar is down about 6% so far year to date, which, like you said, is a significant move in the world of currencies. They're not like stocks; they don't generally go up 10, 20% in a day
not a meme stock.
or a year. So it's not a meme stock. That said, if you zoom out a little bit, you look at kind of the price of a dollar over, say, just the course of this century, it's, still on the relatively high side of the band it has traded in over that time. For example, it's not nearly as low as it was when you're measuring it kind of against a basket of other currencies. It's not nearly as low as it was, say, during the 2008 global financial crisis. So, Ken, why don't you, given that context for everybody, why don't you tell us, like, what is the state of the dollar today?
Well, I want to distinguish between the value of the dollar and the use of the dollar.
Okay.
So we can have a period where the dollar is declining in its value and all the exchange rates, but it's getting used a lot. The value is really high still. I worked on exchange rates my whole life. Narrowly on trying to understand what causes them and to predict them. And the short answer is it's next to impossible. But when an exchange rate's really out of line like this, the yen's really out of line on the low side, the dollar's really out of line on the high side, there's some predictive power.
Well, let's unpack that a little bit. You say that the dollar is out of line or very high right now on the way you defined its value. How do you know that? How do you know that the dollar is at some extreme? What are you measuring it against?
So I'm measuring in terms of its purchasing power. So that's very hard to do. It's very inaccurate. But you could do simple things like what does a Starbucks cost in different countries? What does a McDonald's cost? You can take commoditized things. They're much more sophisticated measures. And it's very hard to compare because people consume different stuff in different countries, and it makes it hard to compare. But when it's this far out of line, So I don't know.
But I want to make sure I understand it. So meaning that, like, versus 10 or 20 or 30 years ago, your dollar, even with the inflation that we've had, you're saying that the dollar in my pocket still buys me a lot of stuff that I want. I can get a lot of calories or entertainment for that dollar.
Compared to other countries. So the dollar is what your currency trades for because they had inflation too.
Got it.
So it goes in cycles. There's another question about the use of the dollar, which is kind of a related but mostly separate issue. The fact that everything's denominated in dollars. It's like English. If you were to issue foreign bonds and you're even a French company, if you want to issue it in Asia, you better issue it in dollars. We can look at how transactions are done, that 90% of all transactions go through dollars. We can look at central bank reserves, which is actually a little less intensely in dollars. Lots of different measures. The dollar is the reserve. It's called the reserve currency, but it really means the dominant currency. And it's way dominant. And the thesis of my book is that it's peaked. It peaked maybe 10 years ago, and it was on a gentle decline for a variety of reasons, but it's probably been accelerated in recent weeks and months.
So are you saying that, yes, we've had a decline this year, but you need to put that into context of just how much it had run up relative to other currencies? Because everyone seems really, really nervous about the declines this year.
Talking about the value of the dollar is really high by historical standards. Its purchasing power parity, how expensive it is to buy things American, to be a tourist in America. It's gotten very, very expensive. I mentioned the yen as an example of one that's like ridiculously low. It can't stay that way indefinitely. I'm not a trader. I don't know the market timing, but it speaks to diversification. This feels like a period where you're wanting to diversify a bit out of the United States. I don't know what's going to happen in different markets, but we've had this period where all U.S. assets and the dollar have just exploded relative to everyone else. And my guess is we'll see benefits to diversification, particularly to Europe, maybe.
So one of the criticisms of the Trump administration's current policies, right, pushing for high tariff levels, kind of talking tough with a lot of our allies, has been that it will impact the dollar's standing globally. It sounds like, though, what you're saying is that maybe they have a little bit of wiggle room to work with, given that the dollar is so historically strong that this, relatively small adjustment that we've seen in recent weeks, though it's maybe jarring, you're saying is in the grand scheme of things not huge. So does that kind of blunt some of the criticisms maybe of what, Trump's policies are doing to the dollar? Or would you say that, well, actually, they are now instigating what, could be a longer term, bigger move in the dollar?
Despite the fact I teach at Harvard, I by no means criticize everything Trump does when it comes to economic policies. I think he gets many things right. But the tariff policy is just the dumbest thing I've seen in my 5 decades as an economist. It's the randomness, the unpredictability. But he is pragmatic and been kind of walking it back. And I think the markets are convinced that it's just going to go away. I don't know. I don't know if it's going to go away. What I'm actually saying is that he has awakened attention to something that was happening and might have happened anyway. It was ready to happen. I describe him as an accelerant, a catalyst. The important points, let's say he did walk everything back. The problem's not going away. I think the dollar, by the way, its value is still way too high. And I think the use of the dollar is going to go down. I mean, before Trump, we were putting sanctions on every country. You don't think China looked at what we were doing to Russia, and that means a lot to them? And you might not think about it, but the Europeans hate it too. So there's a lot of appetite for less. And at the same time, not to go on and on, but our deficit, real interest rates were really low, and everybody was convinced they would never come up. Now they're up. And the deficit, the debt's not looking so easy to deal with. So I think we have more fundamental problems that also are going to make it difficult to stay so high on top as we've been.
Let's bring this conversation to pocketbooks a little bit. If the dollar is, like you've said, kind of in its late middle age and starting to age, and that perhaps, Trump's policies, agree with them or not, have started to accelerate that aging process. What is that going to mean for, you or I walking around, being paid in dollars, buying some things that are imported, trying to invest, save money? What's at stake for all of us in what happens to the dollar?
Or even for investors. Like, what does this mean for the everyday investor?
All good questions. So let me start with the ordinary persons. The fact that the dollar is so important lowers the interest rates on your mortgage, on your car loan. There's a big global appetite for dollars.
It's because people want to buy dollars.
People want to hold dollars.
And so they want to then lend it in the U.S. And so essentially there's a lot of money coming in.
And you can sell it easily. It's very liquid. There are network effects. It's worth like 0.5% to 1%. That said, I mean, that's bad news that we're losing some of that. The fact that interest rates, in my opinion, are higher for long, that's actually an even bigger effect right now. That's really what you're seeing in your mortgage. You're mostly seeing that the era of free money, is over. Maybe interest rates might come down a little, maybe they'll go up, but the dollar adds to this. Now,
so if the dollar can say the dollar just continue to unravel this year, right? It went from a 6% to a 16 to a 26% decline. You say people would feel that in the cost to borrow. Well, that's one way people would feel that.
I not to be wonky, but I want to distinguish between the value of the dollar and how much people want to hold dollars in their reserves and portfolios. This exorbitant privilege is
well,
about
which
the
one is more
rate.
important to interest rates?
Oh, the interest rate dollars pay on top of other assets is the real deep, everlasting privilege that we have. Whereas the exchange rate goes up, the exchange rate goes down, we have lots of shocks. The fact that 10 years from now will be a more balanced system and there'll be more euro and RMB, the dollar might be on top, but might not as much. A lot of effects of that. But this year, here and now, it's the dollar. But this other story exacerbates it. I mean, people are thinking, maybe it's not forever. Maybe I want to get ahead of things.
So I was in the Philippines a few years ago, and I was in a very remote island. And the people helping us, they were glad to accept U.S. dollars, right? I was on my way home. We had a stopover in Dubai. Like, they accepted our dollars. Do we see that change anytime soon?
Yeah, I think there'll be other things they take. So there was a period the euro was on the uptick, and then after the European debt crisis, nobody wanted it. And the renminbi, they're not really anxious in having it circulate outside the country. But I think, for example, some of the apps they have in China, WePay and Alipay, of course they're going to get used in street bazaars in Africa and such. I mean, there'll be changes along those lines. Crypto already competes for a lot of these things, particularly where people are trying to avoid detection. But yeah, no, there's so many ways the dollar's been on top. It's not going away. There are these network effects, but it's shrinking.
So I wanted to highlight something you wrote about in your book, which is Ken Rogoff as investor. So you wrote that back in the 1980s, you were, an economist traveling the world at the time, and you identified that you felt that the yen was essentially too weak. And this was before the 1985 Plaza Accords, right?
Yeah.
At least politically speaking, it turned out officially it was. And so you said that you started putting your retirement assets into Japanese stocks, feeling like there was a big bull market, and you were right for quite some time. What do you see? What's that trade today? What do you think today is the 1980s buy Japanese stocks trade of the 2020s?
Well, I was sort of wanting to diversify. So I was leaving my job as a junior Fed economist, and I had I wasn't there long enough to vest my pension. So they gave me the money and I had to invest it in something. I thought the dollar was really high. I bought yen, Japanese stock market. Greatest investment I ever made, except I'm someone who doesn't pay close attention to my investments back then, for sure. If I had sold it 10 years later, I'd have been a genius, to have done it.
So you held your winners.
I held it too long. I held it too long.
Classic mistake.
Classic mistake.
Well, what's that trade today? What would you say, given these big structural forces we're talking about here, what's the same big picture trade?
Well, particularly I'd be investing more in Europe. I think everyone just criticizes Europe and beats up on Europe. I do in my book. Although I said if they remilitarize, it's a game changer for the euro even. That's another story of why it matters so much. So just, and even emerging markets everything was so low relative to the United States. And I know it's, people are so used to saying, just keep investing in the U.S. It always goes up. It never goes wrong. And separately from the whole dollar argument, that kind of argument never works forever. And I feel like we've hit a bit of a tipping point on that.
We're going to take a quick break. When we come back, one more question for Ken Rogoff.
Ken, we've talked a lot about the risks to the dollar. In your view, what's the biggest reason to be bullish on the dollar right now?
Well, I mean, the United States is the greatest country in the world. The whole, reason everyone was bullish before. We've been down but never out. We have been incredibly lucky. We seem to get lucky again and again and again. So, I mean, one way we could be lucky is that the Europeans just don't pull it together to defend themselves, that China, which is sinking in many ways, turns out to suffer so much from the trade war that they can't, move in, that crypto turns out to be more vulnerable than anyone thought. It's certainly a big thing. The dollar's been on top for a long time. You don't come down lightly.
Ken, thanks for joining us for this wide-ranging conversation about the dollar, financial markets, financial crises. It's been super interesting and a lot to think about.
Thank you for having me.
Thank you. Lots happening with the dollar.
A lot is. Cash rules everything around us, including this very podcast.